Hello, everyone.
What's up? What's up?
How is everyone doing? Happy Monday.
Monday.
I was like, do I hear myself?
Hey, who do we got in the mix?
We got
I see
Max.
Max, Stella, Joelle, Jada. Well, we got G929RR, whoever that is. Lars, Andrea. Love it. Love it, guys. You guys keep coming back. So y'all know how we do today. Today's so it's Q&A day. Whatever you got, send it our way.
Man, we got a lot of people tonight.
My internet coming.
It's kind of bad, yeah. Okay, guys, is his internet bad or is it just bad to me?
I literally have the router right here, guys. So I don't know what else I could
Got to
do.
get our money back.
For real. I don't know what it is.
Oh, yeah, they say it's bad. You might have to come hang out with me.
Yeah, let me just do that.
Okay. Well, he's coming. Make sure you mute over there so I don't hear myself. Hopefully. Okay, well, hello everybody. Vishkar, Andrea. Yeah, Max. I don't know what's going on. Ever since we switched our Wi-Fi, his computer was awful. I don't know what happened. But he's coming. He's coming. He's just gonna come hang out with me. The struggle is real. Oh, Oscar's in the house.
What's up, everyone?
What's up, Oscar? What'd you eat for dinner?
I grilled some chicken.
You grilled some chicken?
Mm-hmm.
That sounds pretty good.
Grilled some chicken. Oh, shoot. We got Joseph joining you live?
Yeah, it's because of the Wi-Fi. I know, Max, we both need new computers, honestly. Yeah. Hopefully, the Easter Bunny will bring a good gift. Santa didn't really come through this year, so.
Dang, you threw Santa under the bus.
Here. Can you see us good?
Now I can.
Okay.
This giant mic was blocking up half my view.
Well, welcome everybody to the Q&A. We're super excited to have you guys here tonight. We love giving back to everybody, and put the questions in the chat. That's what we're here for. So also invite your friends, send your link or send this link to people who could get value from this. And yeah.
Yeah, I mean, if no one has any questions, I guess we could call it an early night.
That's funny.
No, but we've got some things in the works since we got y'all here. We've got some stuff in the works. I know KJ had put out a message in our, the Discord and Facebook too, I think. But basically, we're looking for people to essentially like grow with us, right? So I think tomorrow, did you set a time yet?
Yeah, 2 p.m. Central.
So tomorrow at 2 p.m. Central, we are going to be hosting a Zoom to find out more about that. So if anybody's interested in, working with us, moving forward with us, then definitely be on that Zoom. And we'll talk more about it then.
Also, hi, Mom and Dad. They sent me a screenshot. They're watching us on the screen.
Oh, hey, Mom and Dad. How are you?
Let's go.
That's funny. But yeah, I'm excited for that. We have a lot of people that want to work with us, and we're looking to start delegating and also teaching you guys. So it's like a win-win. We need the help, and you guys get to learn. So that Zoom will be at 2 p.m. Central tomorrow. And then from there, we'll go a little deeper. But
Yeah, after that, we'll be having, I don't really want to call it an interview, more like a get to know you session. So that way we can figure out, what your goals are and how can we help you not only realize your goals, but what's the best fit for you moving forward. And if that's, working with us, we'd love to do that. So that's the game plan.
I saw, who was it? Darth Jader. Wait, no, don't leave.
I love it.
Well, and I like when Natalie said, "Don't forget to hit the like button."
Hey, thanks, Natalie.
I know. Okay, we got some questions. Everybody pulled some questions out.
All right, let's do it.
So we don't go away. All right. Do you want to be in charge?
No, hell no.
Okay. Vishkar says, did you guys figure out how to develop a calculator for creative financing? Where's Ione?
Yeah, I know she will know more. Maybe Oscar might know, but I know she has been working hard at doing that. It kind of got thrown a little bit off just because we want to present a simpler one-pager analyzer along with our underwriting class. So I know she kind of set the first one on the back burner a little bit to focus more on this one that is also going to be given out.
Vishkar, it's in the works. Like literally, it's in the works.
Yeah.
Like, stay tuned, bro. We'll have something for you.
We're trying to have that out as soon as possible because we need that for us too.
Yeah,
so we're definitely trying to get it out there.
Definitely. It's priority of Ishkar. We are working on it. So we'll definitely announce something soon.
Okay, next question. Had a quick question about property taxes. Do you calculate property taxes in-house or do you outsource to a local tax attorney?
Ooh, Oscar's working on that right now, actually.
Yeah, this is a tough question, Max, because there's no I don't even know how I found out. Nobody taught me how to go find property taxes. I just had to go call the county. Like, currently we're working on a deal in Texas and I'm calling the county and they typically will give you like a calculator or like a formula on how to calculate property taxes. And I don't really know other than call the county and they'll help you calculate it. That's the best way I do it. That's how I do it. Maybe Joseph has a different answer, but that's how I do. I just call the county and be like, "Hey, this is the property I'm looking at. What does the property taxes look like?" And they'll help me get a number so we can put it in our calculator or analyzer.
Yeah, that's exactly right. And then in addition to that is find out that county specific and or state specific, how are the taxes assessed, right? For example, Texas, they reassess every year. And then Tennessee, what did you say, Oscar?
Tennessee
every
reassesses every couple of years. So they told me on our particular property that they would reassess, I think, in 2025. Yeah. So it's every couple of years.
So figure out state specific, county specific, how that would look like. And then with that knowledge, go do what Oscar said, get the tax rate and figure it out based on either the assessed value you think it's going to be or the purchase price, whatever your state says to do. But that's how we would go find it out. Just do some digging, your due diligence. Sorry, my question master fell asleep on the job over here.
She delegated to you, bro.
I know, bro. That didn't last long.
That was quick silent delegate. She was like,
we got Darth Jader. How do you underwrite in mixed use building? Man, that is a beautiful question. I'm not gonna lie. I'm just fairly straightforward with you. I personally still struggle with this one a little bit, just because it is done differently. So the residential part is done the same way we've been teaching, right? It's regular old fashioned, but then you get to the commercial side of it, and that's where it gets a little bit differently. So yes, commercial property, like commercial spaces, are rented out or leased out as well, but usually it's a much longer term that it's done for. Yeah. So you could still like there's a bunch of nuances that go on with it. So you do it the same fashion, but it's not calculated in the same way, right? So rents,
It would affect your business plan, is what Joseph is trying to say. Because
yeah,
some leases can do, like some commercial leases can be 24 months or maybe a little bit longer. So you would just have to underwrite it differently. And it's priced differently too when it comes to the type of rent that you're looking at for commercial space. So you
cheap
definitely
per
want to
square
get,
foot.
yeah, per square foot, exactly. You definitely want to go and talk to someone who's more familiar with commercial leasing, because if you have space that's underneath and it's not leased, that the lender will, if there's a lender, they'll more than likely there will be a lender. Then you have to work closely with them, and then you have to worry about getting that space leased and what type of lease you're going to put in there. Like we can get into into a big like rabbit holes and stuff like that with triple net leases and regular leases. That's a whole different subject in its own that I still am trying to figure out myself, and the team is too. So there's just a bunch of different things. But to answer your question, Darth Vader, if you had a rent roll and it was mixed use, it's typically underwritten the same exact way. There's just a little different things that you have to look at.
Yeah, yeah, it's more things that go into that underwriting, different scenarios you have to keep in mind,
Yeah.
as well as the pricing is slightly different too.
Yep.
But if you have something, definitely reach out and we can help you as much as we can and maybe get the guidance you're looking for on it. Because we definitely know people that work with mixed use. They love mixed use buildings. So it's definitely something we have access to. We're just not the best resource to do it ourselves, but we have the access to get that resource. Yet, exactly. Exactly. Okay, the next one I got is Joelle. So far, we are learning from Vina about raising capital. What is something new you guys learned and are applying?
That's a good
Oh,
question.
Yeah, I think something new that we learned is that you can't have a GP percentage or portion for just raising capital. We were totally under the understanding that you could get a GP position by bringing in capital for a deal. And
Yeah.
that's something new that we learned. So I
yeah.
didn't know that.
What about you, Oscar?
Oh,
So much.
I
Yeah,
know
there's so
that.
much that we learn
I
daily.
know. I'm really big into what Vina teaches about syndication and deal structure, because that's up my alley, right? So for me, Joel, I even dug deeper on another Zoom I was watching about the PPM, so the private placement memorandum and how that gets structured. I have like literally a whole thing full of notes that I took the other day just watching that Zoom on the PPM itself. So the reason why I'm learning this too is because we are working on a deal, and if you're part of deal structure and you're doing the syndication, you should be very well versed in this. And so that's, for me, I've just taken the initiative to learn as much as I can. And for me, that's the biggest thing, is I don't need to know the legalities of everything. That's why you have your attorney, right? Again, disclaimer, we are not attorneys,
I got
right?
you.
Thanks, bro. I'll make it clear again. We are not attorneys. Okay. Consult your own attorney, CPA, and financial advisors for any syndication that you may do. But for us, you just need to know enough to be dangerous. And then that's why you hire an attorney to do everything else. But I do want to understand why the attorney is doing what they're doing. Right. I think we had a call with the attorney last week, and KJ was on that call with our attorney reviewing the PSA, the purchase and sale agreement. And KJ had asked the attorney, like, why is it that you are what are your thoughts going through this purchase and sale agreement? And they were really cool. They told KJ, they told us on that call what their thoughts were and why they were doing what they're doing. So having an attorney that's, you know, I guess you can say,
Down to earth, one of the good ones.
yeah, pretty much, right?
From them.
Someone who's going to teach you the process. That's what you're wanting to get, right? Because we've had attorneys before where they just did everything but no explanation towards why, right? And so having that attorney that actually takes the time to teach you why they're thinking what they're thinking or doing what they're doing, that was priceless to us. So yes, that I forgot, I went off on a tangent.
She needs to do a mentorship because I really want to learn more from her. Like she dropped so many gold nuggets. It was cool. I appreciate everything she's been doing. It's been really helpful. It's always good to get different perspectives from different people with different levels of experience.
Ooh,
Because
I'm looking at my bad. I'm getting ahead of myself, but I'm looking at a Vishkar's question. And I'm like, damn, that's a good question.
Yeah, I saw that one too. But we got a couple in between there. So we'll go to the next one. We got Rob Dodd from Minnesota. Are IO loans only available for huge deals? No, they're available for pretty much all of them. So this is what my lender told me, and I work mostly with a mortgage broker. So they are not the lender themselves. They broker the loans from other people. So this person has a database full of a bunch of lenders, and he takes the information for the deal, puts it out in the database, and all those lenders send back potential offers or preliminary quotes for those specific numbers, right? So that's how he works. And what he told me is that these quotes, every single one of them is available or has the opportunity to have some kind of interest only period on there. It doesn't say that, but all you have to do is ask. You just ask them for an interest only period and see what kind of terms they will provide for that interest only period, whether it's 1 year, 3 years, 4 years, 5 years. Maybe there's some extension clauses to it, right? All of that could be discussed afterwards. But for commercial multifamily loans, for the most part, very general rule of thumb is that they can pretty much all have an interest only period. You just need to ask. Okay, what's the next one?
do you think it's better to use a broker because now you get so many different options versus just one lender who's like, this is my only thing?
I like it because of that. I get a bunch of different options, but I know that he's really good, and I feel very comfortable with him. And just how Oscar was saying about that attorney, he's willing to explain and go through things. Same thing with this guy. He's willing to, work with newer people and walk them through the process. And he's a really cool guy, very down to earth. The con with going with a mortgage broker rather than that direct lender is that they charge a fee. It's usually a 1%, 1.5%, usually 1%, just depends. So that could affect your bottom line as far as how much money you need to raise, right? So 1% of a $15 million deal is $150,000, right? So that's $150,000 you have to pay to them.
Maybe I should be a broker.
A mortgage broker.
Yeah.
So it's just, what do you prefer to do? But I know that working with them, I can find a multiple different loans and get a better understanding of what I'm looking for and have a good solid starting place on what other people are offering. And then if I, in the end, don't want to go with them, then I don't have to, right? But the relationship that we've been building with him makes me want to go with him because he is a very cool person just in general. And he knows his stuff, and he's been very helpful. Okay. What is the next one? There we go. Is 4 units considered a multifamily? It is considered multifamily, but not commercial multifamily. Commercial multifamily is 5+ units. 2 to 4 units is residential multifamily. So they are not underwritten based on the NOI and the T12s, rent rolls, and all that good stuff. 2 to 4 units is comped like single family. So it's compared to similar properties nearby. Ooh, that's a good question. Joel says, how would you correctly wholesale a multifamily if it doesn't fit our buy box? You guys want to take that one?
Everyone's looking at KJ.
Yeah, I mean, I can. I just was waiting for you guys. Who? You or me, Oscar?
You got it.
Okay. Depends on what you mean by wholesale. Like, are you trying to get it under contract and then move it, or are you just trying to partner? Like, I would just say find a buyer who you think it would fit their buy box, and then show them the financials. And if they're interested, then negotiate a fee, but don't try to put it under contract. Like, we've been spending a week already with this deal where we haven't gone under contract yet because both of our attorneys are going back and forth with changing things in the contract and making sure it's right. So you definitely don't want to, especially if you're not familiar, you don't want to just get it under contract, because then once you put it under contract, that due diligence period starts, and then that's a ticking time bomb. So if you don't know what you're doing, and then you start that timer, it's already starting off pretty bad. I would not buy any deal that someone already has under contract. I would want to create the contract ourselves and have our attorneys look at it beforehand and put certain stipulations or things in there that we want. Because like the contract that we had, there's some things in there that I was like, why is that in there? That's not right. Like, if you signed off on that, you would be screwed. You would have screwed yourself over. So it's very different than single family. So I would just build a good relationship with some buyers, and then say, hey, I have some deals. This is kind of, I would give them a rundown, not everything. See if it even piques their interest. If it does, then I would move forward. And like for us, we're kind of doing the same thing with some deals that don't fit our buy box. And we're starting off with one deal. I'm going to send them one. I'm not going to send them everything we have. I want to see how this person is, because we're vetting them, right? Like, are you a serious buyer? Or are you actually going to perform? So that's how I would do it. Just my opinion.
What is a reasonable wholesale fee or dollar amount to put on that?
I think it depends. Like,
it depends.
That one doesn't apply.
I was just waiting to use that one.
Like, for us, we built the relationships with the brokers and sourced the deals, and we've already done the underwriting and things like that. So I think that's different than like someone sent me, like another wholesaler sent it to me, so now I'm just forwarding it, and I didn't look at it. The financials are outdated. I don't know anything about it. I can't answer any questions. I can't get you on the phone with the broker. That's very different than, hey, I'm direct to broker. I have control of this deal. I know everything that's going on with it, and I can help move this deal along. I think that will determine like how much you can ask for. But I would say anywhere between 0.5% to 1% would be reasonable.
Beautiful. So this is the question Oscar was talking about. You want to touch up on it?
Yeah, sure. I mean, Vishkar, he's asking, how can I learn advanced underwriting with waterfall structures, etc.? Vishkar, we are still learning ourselves too. Like, there's so many intricacies in structuring waterfalls, right? Like a preferred return and like class A investors, class B investors. I mean, there's so many things in there that you can add. I think I overheard Vina say that they had like tons of things in their waterfall that the reason why
different ones.
seven different ones.
Wait, what is a waterfall for those who don't know?
So general understanding of a waterfall structure is you have we'll do three, keep it simple, right? We have three different classes of LPs, of limited partners in there, right? So the first class is the people that put in the most, third class people that put in the least. So those people that put in the most, and this is very general, there's a lot more specifics. It can be done different ways. So this is generalization. So that first tier, the people that put in the most, they're going to have a higher return rate, whether like Oscar was saying, maybe that's the 9% preferred returns. So they're going to get taken care of first. Then it's the next class, and then it's the next class. So that's the waterfall part of it, right? So let's say each of them have preferred returns. One's at 9, one's at 7, one's at 5. That first class, that 9% preferred returns, they're going to get paid first. Then the 7% people in class 2, and then the class 3 gets paid last. Let's say there was no splits, or there's no preferred returns on the last one. They just get their portion of that split equity. So it just, waterfall structure just means there's a hierarchy of people or investors that get paid, and it's varied on however you structure the deal in the beginning. But that waterfall structure is just talking about the different tiers of payments, the different levels of getting paid.
Yeah, and that's part of the reason why, Avishkar, I wanted to answer this question is because, yeah, you do put it in your underwriting. It's part of your underwriting. Unfortunately, we haven't found that's kind of why we're working on our own analyzer, right? Because we want to be able to be creative in how we structure all these things. And yeah, some of our analyzers do have some sort of waterfall structure, but it's not like 7 levels that I've seen so far. So we are still working on it. We're learning as well, but we're definitely getting into those rooms that are teaching it so we can learn and bring it back to you guys.
I don't know the answer to this one. Maybe you do, Oscar.
What is considered an executive on the GP side? Heard there was a limit where it alerts the SEC. Again, I'm not an attorney, Joel. This would be an attorney's or securities attorney question. But from what I heard the attorney say today, and again, we're not attorneys, right? Just putting that out there. That there was a questionnaire that you have to fill out, and it asks in that questionnaire how many executives are basically who are the GPs, right? And if there was more than X amount of number, then just relay that information to your attorney, communicate with them. But I don't think he mentioned that there was a limit. But it might be something, again, you might have to discuss with your attorney. Maybe the SEC will come back and say, why is there so many people? But as long as you communicate with your attorney, it should be fine. So bottom line, Joel, go talk to the attorney about that question. We are not attorneys. They probably have a better answer than we do.
And I just wanted to add a comment to Max's statement here. He says, I believe GPs cannot only hold a raising capital position due to the fact that private capital raises are seen by SEC as people operating as unlicensed securities brokers. So I just wanted to point out that this is what we had found out earlier today and highlight the point that says they cannot only hold a private capital position. So people can have GP equity for raising capital, but that can't be their only job. They have to have some other part or aspect that they're in charge of and are responsible for in the GP table, whether that's taking on some kind of asset management role or the contract closing section. I just wanted to point that part out, right? So you can earn GP percentage for raising capital, but that can't be your only role.
Learn something new every day.
Every day. A drop and swap. I've never heard of this.
I just looked it up. I've never heard of it myself. It definitely sounds like something creative, but I don't know enough about it, Billy. If you do, come back and let us know. I'm interested because it sounds creative. What I read sounded really interesting.
Yeah, definitely share. That's cool.
See, we're right there with you guys. We're learning every single day, like a drop and swap. Now I'm intrigued and I want to know. I mean, that's got the coolest name around as far as I'm concerned. You want to say that name, KJ?
No, you and Oscar make fun of me.
Arturo says, what's y'all's most important KPI in your business and what do you try to keep it at? Ooh, beautiful. So I think probably that's one of our weakest points just in general is that the corporate structure, having your systems and processes. And that's why we've spent so much time these past couple of weeks trying to get that squared away and have a CRM set up and get those KPIs in place and the SOPs in place to start tracking our KPIs. But the one that I would say right now probably holds the most weight is how many deals are coming in, how many LOIs are we actually sending on these deals, and how many LOIs are actually getting accepted. And then out of those that are getting accepted, how many are actually making it to closing. So I think that's a good start as far as sourcing the deals and finding them. And what we've been seeing is out of all the LOIs we send, I think maybe 1 out of 10 actually, is considered or moves past. Maybe gets a counter LOI sent back. So the KPIs are definitely low for sure. There's a lot of no's that we get on a daily basis. So
we also have like 8 LOIs sent out and no response because brokers are still on Christmas vacation apparently, which is annoying.
No, and it's got us anxious because there's at least 2 that I really want to get. So I want to know already.
I know, it's just the waiting game. But yeah, we're working on that. I think as we get more organized, we can share our KPIs.
Yeah. So it's a work in progress. Definitely, just the point is don't get discouraged. There's a lot of no's that you have to go through, and just keep pushing through. You're going to get to that yes eventually. And everyone is going to be different. You might get lucky on your first one, or maybe the third one is a surefire deal. So you never know. Okay. Looking for a question. I think that's a question. Leha says, I have multifamily buyers that are looking for 15 plus. Ooh, that's crazy. Cap rate for return on investment. I have yet to see any market these days that offer 15% cap rate. Could they mean cash on cash return or internal rate of return?
I feel like either way that's like really high.
Well, if it's IRR, that would make sense, which is the internal rate of return. I could see that because we typically look for 14 plus. I mean, we don't even really look at that statistic, but from what we've been told, if it's 14 or better, that's usually relatively good. But cash on cash being that high, if you have a deal that high, I want to know about it. Let me know, because that would be fantastic. Before, that was, relatively reasonable. Now it's just not. That's not the case right now. Because I know last year, double-digit returns, which would be the cash on cash, that was pretty typical. Just right now, it's not realistic with everything that's going on right now. So I would get more clarity on exactly what it is they're talking about. If it's the IRR or ARR, that's pretty reasonable. If it's cap rate or cash on cash, it's definitely not so reasonable right now. It's not impossible, but it's not reasonable right now. If it's cap rate, that means the properties they're looking for are complete value add projects, like total gut jobs, buy cheap, sell high. That's if that number and they're looking for cap rate, that's what that means. It's a total value add, basically a gut job.
That one. Oh,
Which one?
this one was the next one. What does your acquisitions team structure look like, and what do their daily tasks look like? That's something Oscar and I have been working on.
Arturo asking the good questions over here. You definitely are. You an integrator, Arturo? So what does your acquisition team structure look like? So the way our conveyor belt, and I think we've broken this down before, won't go into detail, obviously, but it's typically Carolyn and KJ who are sourcing deals. So they're the ones reaching out to brokers, finding those leads, and then bringing them in. And then it goes to, of course, provided it passes the napkin underwriting, it goes to our underwriters who are Joseph and Ione. Joseph and Ione underwrite the deal. And if it makes sense to put in an offer, then we submit an LOI. If that LOI gets accepted, then Myron and I take over on the deal structure. And then after deal structure, me and Joseph will do asset management. There's a lot more in there, but that's kind of like a high level conveyor belt on how the acquisition team structure looks like.
Also, if anybody wants to join our team, we're hosting a Zoom at 2 p.m. tomorrow. And we're looking for people who want to call brokers, people who want to call direct to seller, and then we're looking for underwriters. And so on top of that, since I have you guys here, on the 21st of January, we are hosting an exclusive paid Zoom. This is probably the first and going to be one of, like, it's going to be a while before we do another one. But we're going to do 3 hours, probably more. And I'm creating slides. We're giving you an underwriter that Ione is creating.
An analyzer.
Oh, yeah, sorry. An analyzer, the napkin analyzer. You're going to get a breakdown of the T12, the OM. And it's not just surface level. Like, Joseph and Oscar are probably going to lead this, and they're going to literally break down everything. Like, what is Joseph looking for? How is he then taking that and putting it into the analyzer? How is he coming up with different offers? How is he structuring everything? Oscar's going to come in and tell you exactly, like, okay, how are we going to structure this deal? And we're also going to show you guys, case study. We're going to show you the financials and exactly what we did to close the first 2 deals that we closed. And we're going to show you, like, the first deal, we literally had no financials. So we're going to show you how we closed the deal with no financials, what we did and how we did it. And then the second one was pretty much kind of similar, and we did that, both of them on seller finance. So we're going to show you not only live underwriting, going through a deal, but also showing you the case studies of our previous deals. You're going to get the analyzers. You're going to get to be with us for 3 hours. Oscar and I are going to take the time to make really good slides for those who are visual learners. We are pouring hours into this, which is why we're doing a paid Zoom. But also, we want people who are serious. This is what's going to set you apart from everybody else, because everybody can come to an underwriting Zoom when it's free. But when it's paid for, that's when you see who's really serious about taking action. And so we only have limited spots. We're doing that for a reason. We want to be able to be intimate with you guys and actually pour into y'all. And all this hard work and time that we're putting into it, we don't want it wasted on people who are just going to absorb and not take action, because we are looking for people to come onto our team. And so a lot of the people that show up to this underwriting Zoom, I'm going to see them as a potential person to come bring onto our team. Especially because if you're willing to invest in yourself, then I know, like, you're serious and you're willing to take action. So if you want details on that, sorry, I'm out of breath. If you want details on that, what should we tell them? You can go, if you want to put the website here in the thing for them. It's UW for underwriting .jbm legacy, I'm typing it, .com. Okay, you can post it. And then, okay, so you go there, you can sign up there. That will, I'm really struggling, guys. That will be on the 21st. That will be the last Zoom that we host before my baby gets here. So take advantage of having Joseph, because it's going to be a while before you see him again. And like I said, we're looking for serious people, and we want to pour into you guys. And I hope you guys get value from what we're doing, because we know people who charge $1,000 and all they teach is napkin underwriting. That's it. Surface level stuff for $1,000. We're doing a whole deep underwriting Zoom, giving an analyzer and everything for a fraction of that. And we've paid over $100,000 as a team to learn what we know. So we're giving you guys a steal or a deal, whatever you want to call it. It's more so just to pay for our time, and also so we can set apart people who are serious or not. Okay, I'm done preaching. I need to catch my breath. I hope you guys come.
So Joelle asks, so what is preferred equity exactly? When is preferred equity usually applied? It's a great question. So preferred equity is like a promise to pay first, right? So it's going to be a little bit of an advanced answer. So sit tight, hold your horses. I hope you can follow along. Maybe the two visionaries can help explain it.
I'm already checked out.
Okay. Oh man, you did me dirty. Okay, so let's say it's a 70-30 split. That's it. We'll start with that, right? So what does that mean? That means all of the cash flow after the mortgage and everything's paid over, all the remaining cash flow is split 70% to the investors and 30% to the general partners. Okay? Now what happens if you add a 5% preferred return to that? Okay? How does that work? So that remaining cash flow after the debt and everything's paid, the first thing that gets paid out is that 5% of preferred equity or preferred return. And that's 5% of the total capital raised. Okay? Hope you're following. It's that percent, not the 5% of the cash flow, not 5% anything else. It's 5% of however much the total raise was. That's how much they're promised to get paid back on that first year. And that money gets accounted for first. Then whatever is remaining, that is split 70-30 on that model. So when is it applied? It's applied when you're trying to make the deal more attractive or have better returns. Typically, we try to avoid putting preferred equity just because Carlos says it's a gimmick, right? It's to make the deal look sweeter, make it look a little bit better. The reason is because they're getting that promise to pay first. So it's got its pros and cons. Like some people like it, some people don't. We're not opposed to doing it. Carlos is opposed to doing it. He doesn't want to do any deals with preferred equity. We're okay with it. It just really depends on the deal. Oh, hang on. Where's that banner? Yeah, it depends on the deal. And if you can make the deal a good deal by putting a little bit of preferred equity, it's something you have to consider.
Yeah. I was about to say the same thing. Preferred equity and preferred return, two different things.
Yeah, sorry. So I'm using them at the same thing. So preferred return is what I'm talking about here.
Yeah.
Preferred equity is something totally different that I didn't talk about at all. Joelle threw me off with saying it this way, but I was talking about preferred return. Thank you for clearing that up, Oscar.
Also, for some reason, people commenting on my Facebook isn't popping up on here. I need to fix that. But Sean Clark was asking a question, so I kind of wanted to talk about it because it's not anywhere on here. He said, how do you figure out how much cash flow you get from a property?
It depends on the other.
Yeah.
The banner. Okay.
It's whatever's left over after you. So your NOI, right, is your net operating income. It's what you have after you pay your property expenses. Then after you pay whatever else you have to pay, whether that's CapEx, whether that's or not CapEx, deferred maintenance, which is leftover CapEx from the last owner, or the debt service, all those things that you have to pay for. Then whatever's left after that is your cash flow.
And then he said, look at that CS3 liter plaque. Look, I got one. Oh, wait, you can't see it. There's mine. And then Oscar's got one too. We both rocking it. But yeah, sorry. Side note. Okay, anyways.
Beautiful.
Yeah, Sean, go to our YouTube channel and then comment the rest of your questions and we can get to them. Because for some reason, they're not popping up on Facebook. I don't know what the deal is.
Plus, if you're on Facebook, you guys are missing out on this opportunity to network with people. There's 41 people in the YouTube right now. So you could be networking with your next partner or investor, or maybe the, I don't know, the Kent Clark to your Batman. You never know. All right. Joshua says, what multifamily conferences are y'all attending this year?
Where are you going, Oscar?
Yeah, because KJ and I aren't really going anywhere for a few months.
I'm probably gonna see if I can go to Growth Con. I think there's one that Pace is a keynote speaker in that I want to go to as well.
There's one in Houston that is going to be on the 25th
through the 27th, and Vina Jetty's going to be there. It's
It looks good. I want to go, but I believe that's the day that Sailor will get here. We'll have the Baby Mud on induced on the 24th, popping out on the 25th. So
this month, the one with Vina.
Yeah.
Well, there's another one with Vina, so she's doing like 2 events this month.
Okay. Well, if she has one going in Houston, then I'll probably be there.
Yeah. I know. I was good. Like, I really wanted to go, or I wanted Joseph to go. But
I really want to go.
It's what's his name? Robert Martinez. He's apparently big in Houston.
Oh yeah, says Vina. She says, yes, I'll be with Pace that weekend.
Amazing.
Okay.
See, so you got multiple rock stars at that one event. So that's coming up in Houston here on the 25th. I think it's a couple days. So definitely check it out if you're in town or you want to just be in town. That's a good spot to go.
Definitely going to be at this one, Vina. I will be there for sure.
I might make the drive too.
I know I can't go, but it's fine. I won't make it, but I told you to go.
24th meetup with Victor.
Dang, 3 meetups, 1 month. Y'all asked for meetups. There you go.
Vina's got the connect.
3 in 1 month.
I'll be there too.
I love that.
All right, next.
Also, shout out to Vina. You've been dropping so many golden nuggets. We appreciate you so much.
100%.
Oh my gosh. Like, we learned so many new things today.
I know. And so many new things, Vina. I don't have enough good things to say other than it was super valuable. That's actually kind of funny story. And I guess I'll tell it while you're here, Vina. So KJ had sent me the Teachable link over the weekend, and I took a look at it. And maybe, I'm not sure, maybe I'm tripping here, but I think it might have been free to see some of that stuff, the Zooms, but I didn't even ask questions. I just went ahead and signed up and paid for it. And I was like, oh, this is so much worth it. Like, it was so
you paid for it was free.
I didn't question it, nothing. I just, man, and I was like, wow, for the amount that I paid for, this is like thousands of dollars, like literally thousands of dollars. And I'm like, man, what a steal. Like, I felt so proud of myself. I was like, this is amazing, learning so much. And I was like, man, if you guys don't know about the challenge, like, that was in itself just a challenge. Amazing value. We've literally spent thousands of dollars to learn that stuff, and Vina gave most of that for free.
Mm-hmm.
And even if it wasn't like the price that was there, I was like, there's no way. I was like, oh my gosh, it was so freaking amazing. So
what a steal.
Thank you, Vina. And of course, thank you, Nick. It was so freaking amazing. Thank you.
Sorry, Cage is over here messing up my mouse.
My bad.
All right, here we go. Rob Dodd says, where can we learn commercial multifamily business model strategy options? Have run into so many different buy boxes for teams of investors. I mean, I think it sounds like you're already doing it, talking to different investors and what they're doing, and just asking what works for them, what makes sense. It's really going to be different for everyone. I mean, it's just like single family, right? There's a million ways to skin the cat. It's just which one makes the most sense for you. And some of them may be really similar and have just one thing that's different. You're really just going to have to get out there and just start talking with people, going to these meetups that are going on, and just networking your butt off, talking to as many people as you can. That's really the best answer I can give you is, yeah, there's all kinds of, content out there, some free, some paid, but the best schooling that you can get is by physically talking to these people, getting up close and personal, making the connection, because this business is all about relationships, and it's the who, not how. So keep talking to people. Just get out there and network.
Yeah, Rob, and I'll add something to that because I had gone to a dinner when Carlos was in Dallas, and I think it was some event. I don't remember. It was in Dallas maybe a month ago now. And I went to that dinner with them. I I hate to say this, but I almost didn't go because things came up, right? Life happens. I almost didn't go, almost didn't make it. But I'm so happy that I went there, Rob, because in that room, I felt like, um, let's just say I wasn't the smartest person in that room. That's the rooms that you want to be in. Like, you don't want to be the smartest person in that room. And being in front of those people, just listening to their high level conversations was like worth thousands of dollars. I know I keep saying that, but it really was because I had a question that I didn't know how to figure out. Like, we were looking at deals. I think Joseph remembers this. Joseph and Ione, they were underwriting deals like crazy. And they were like, man, we're missing a piece. Like, how can we get creative doing this way and this strategy and this strategy? And so we didn't know the answer. So when I went to that event, I sat next to Carlos and I asked him, Carlos, here's what we're looking at. Like, this is what we're struggling. We're missing something. There's something here. I just don't know how to figure it out. And I told him what we were looking for, but then we got distracted by another gentleman. His name is George. I don't know how to pronounce his last name. Abreu, I think. Aubrey or something like that.
Abreu, yeah.
Abreu, yeah. George Abreu. And he was sitting there talking about their acquisition model, their business model in multifamily. And he was saying a lot of the things that we do are loan assumptions, and then they get creative with that equity. And that was the missing piece that we were missing. Like, as soon as he told us how he was doing it, I asked him immediately, like, how are you doing that though? Like, I interjected, like, I needed to know because that's what we were missing. And he told me how. And so, like, as soon as I learned that, yeah, Vina, I think you were at that event that he went to in Dallas. I think you were flying out to Phoenix that night or something like that. But anyway, um, he said that, and Carlos turns at me immediately and he goes, "There's your answer." And I was like, amazing. Like, I learned it. I started texting Ione immediately. I was like, I figured out, like, I broke the code, I know it now. And then I texted Joseph the next day, or I called him. I don't remember, but I texted him and I was like, dude, I know how now. And I also texted Myra and I was like, dude, you never know. You'll never guess what I just learned. Like, I learned that just by being in proximity to these people. Like, that's how important it is to get into the right room. And speaking of someone who is very high level, you have Vina right now in the chat, and we learned just so many things with her and her free challenge. So she also taught us different strategies on like how you can structure waterfalls, and the attorneys can help you out in doing all this stuff. So just surround yourself with those people, and you'll start to know more business models or strategies or options that you can do for you and other investors, so you can add more value to them. So hope that helped.
You gotta offer, bro. You could start renting out that couch.
I know.
Cash flow.
Get some cash flow.
Pay for that CRM we need.
All right.
Awesome.
Sorry guys. I was now I'm looking for my spot. Hang on.
I know we got so many comments. Let me see.
Hang on.
Okay,
found it. Now I just gotta find the next question. Okay. 1 second, guys. I apologize.
Loading.
Okay, boom. There we go. Joshua says, is there a difference when comping small multifamily, 4 units and below versus 5+ units? If so, what's the difference? There is definitely a difference. I kind of touched on it a little bit before. 1 through 4, so 1 unit, single family. 2 through 4, duplex, triplex, quads. Those are all comps by similar properties in the neighborhood. Just like you comp a single family house, you go and look at in the neighborhood what's sold, what's similar. That's how you comp those 1 through 4. Once it's 5+, you comp it based off of what it's doing as a business. You comp it off of the NOI.
Is it even called a comp?
No, it's not. But I'm using the same word. It's underwriting or analyzing. But you're essentially doing the same thing. You're trying to figure out what the property's worth. It's just interchangeable words, you could say.
But comp is like single family.
Yes, comp is single family. Underwrite is multifamily, 5+, and that's done. We're gonna actually teach how that's done coming soon. But you're using the financials, the T12, all the rent roll, all that information. You're using that to figure out and analyze what the property is doing and what it's valued based on what it's producing. That is correct. On the 21st, 2 p.m. Central Standard Time.
Saturday. We're doing a Saturday just for you guys.
Oh, and the Zoom tomorrow, Darth Jader wants to call brokers.
Oh, nice.
Brett would love to be a part of the team.
Love it.
Michelle, she's working hard to get out that W-2. I know she is.
Hustling, man.
She's a hustler. If y'all don't know Michelle, y'all got to go connect to Michelle. Nicole. There is a link. It's UW. Oscar, will you put that link in the chat real quick?
Go to the link, and all the details about what's included and the price is all on the website for you to check out.
He's posting that real quick. We'll leave it up for 2 seconds.
Philip said, how can I partner with you guys? Come to our Zoom at 2 p.m. tomorrow.
Philip, come to the Zoom tomorrow, 2 p.m. Central Standard Time. We're going to talk all about that.
I'll be posting the link on the Facebook group or the Discord if you're in the Discord.
Okay. Inspired by a previous question, I've heard you say before you still work single family while working towards your multifamily goal, how would you say you balance your time between the two in chasing leads / agent outreach? Ooh, good question.
Definitely have to time block.
Time block. That's the answer.
Time block is the answer. We still do single family on the side. It's we didn't eliminate it. That's how some of our active income comes from wholesaling.
Yeah.
So you definitely want to take time to time block and focus on income producing activities. Multifamily is a long-term game. So just keep that in mind. You don't close a multifamily fast. It takes time. In single family, you're looking at 30 days or less, or maybe more. So it's a means of us still being able to have that active income while we do multifamily.
So time block. And throwing this out there, for those of y'all that are wholesaling, we are buying wraps. If you have wraps, they're good deals. We would love to look at them. Haley Holmes says, what if we live in California?
We talked about this earlier.
Yeah. What was the answer, KJ?
I don't want to answer. Don't put that on me.
All right. So what we're looking for, guys, mainly with the way that the pay structure has to be. I guess we weren't really going to talk about this, but might as well.
No, I think the better thing would be, Joseph, is with the way our buy box is, right? We don't typically look at California just because of the laws, right? They favor the tenant in most cases in California. So for us, we would be looking at landlord-friendly states, or typically if you have a deal, we'd like for you to be in that market so you can be boots on the ground. So we'll talk more about all the details in the Zoom tomorrow, Haley. So it's not to say that you're not welcome and anyone is welcome to the Zoom. We will definitely set some, I guess, our buy box parameters and kind of go from there.
So my next question would be, let's say we get a juicy deal that you bring in. Would you be willing to move to that property? Or, just get a wholesale fee. So It depends on what your goals are. So we'll talk more. But
Yeah, come to the Zoom tomorrow, 2 p.m. Central Standard Time. We'll post all about it everywhere on Instagram, on the Facebook group. You won't be able to miss it.
you just have to keep up. Just remember and then go check Facebook. Because I can't get to everybody.
Okay. And Renee says, will the creative finance analyzer be included in the private Zoom? No, it will not be in a Zoom. There will be a different analyzer. It's a one-pager. It's simple to read and use and digest. It will still help you analyze the deals, but it is not the creative finance one.
That one's in the works.
That one is in the works. Okay.
Ooh, Robert already got his seat for the Zoom. I know lots of people are already signing up for the paid Zoom. There's only a certain amount of spots, guys. So.
Hey, there we go, Robert. Okay, the couch might be open for you then. Okay.
Hang on, guys. I'm looking for the next one. We had a whole conversation going on here. I love it in the chat box.
It's not too comfortable though, Rob. I can for sure. I can confirm.
Funny.
And if you're tall, it won't work for you.
Are we going to this conference? I don't even know what conference it is. So, no. Yeah, I'm sorry. I don't know what conference it is. I don't have any plans to go to any conferences following birth of baby Mud, at least for like a month or so. Okay. What return benchmarks do you normally use for presenting to the investors? We typically go based off the cash on cash. That's usually the first question our investors want to see. The ballpark generalization, Class C, we're looking for 4% or better. Class B, we're looking for 5%.
No. Class A is 4%. You said Class C.
Oh, sorry. It's been a long day. Yeah. Class A is 4%. Class B is 5%. Class C is 7%. Greater is better. That's just the bottom dollar that we typically look for. And the other thing people ask is how fast will I get my money back?
Yeah, I mean, when you're presenting it to investors, we'll typically do the cash on cash, we'll do the IRR, we'll do the equity multiple, and then our business plan, of course, and that's pretty much, and cash on cash, right? So that's kind of the metrics that they really care about in most cases. So that's kind of what we do when we present to our investors.
Renee is asking how to find out about the Dallas meetup. I assume he's talking about Vina's on the 16th.
I would make sure you're following her. I see her posting about it all the time.
Yeah, follow her on Instagram, and she's got that Facebook group as well.
Mastering Multifamily with Vina Jetty. I'm pretty sure that's it.
Mm-hmm.
You guys
but it's January 16th at 7:30 p.m. I think the location is still up in the air.
I'm looking for the next one, guys.
You got to go to the Dallas meetup and meet the queen.
I do want to go. I intend on going. Let's just leave it at that. I do intend on going.
You can break this couch in if you want.
Hell yeah.
Let Robert know how to
Sorry, Rob. I get first privileges.
That's funny.
Okay. If I bring prospective deals, will you bring me on your team? I just need your team's buy box. Yeah, so that's kind of what we're going to talk about tomorrow.
At 2 p.m.
But general rule of thumb, yes, if you're going to be boots on the ground for that property.
Or you can put the disclaimer. It depends on the underwriting.
Yeah, there you go. Hang on. Where's it at? Boom. I love that thing. Okay. Crap, I lost my place now.
Way to go.
Wait, sorry. Are you sending out the text for the 2 p.m. meeting?
I was not.
I think you should potentially.
It's going to be like 600 people.
Okay, we won't be sending out the text.
I guess I can. And see what happens. And it's annoying because this CRM is poo poo, and like I'll plan it to be like, hey, you get notified on time at 8 p.m. and I have myself on there, and I get notified like 30 minutes, maybe an hour later, and I'm like, well, that's embarrassing. It says, hey, we're starting a Zoom, and then you get in an hour later. So can't really control that. It's a little it's lame, but I think best way to do it is just you know what? Okay, after the Zoom, I will sit down with Oscar and Joseph and create the link. I just need to create it, and then I'll post it tonight. That way you guys can have it for tomorrow.
So where will it be posted?
In Facebook.
And?
Discord.
And?
I guess on my Instagram.
There we go. All three. Facebook, Discord, Instagram.
Okay.
It'll be there. Both. You said tonight?
Yes, I'll do it tonight.
So tonight and tomorrow it will be there. So be there or be square. I'm not seeing any more. Oh, here's a question from Joel. Would you go for mixed units like the Gateway Village, which is Carlos Satil? Oscar, would we go for that?
Yes, 100%.
Hell yeah, we would go.
100%. Those are goals right there.
Yeah. Mixed use properties usually have really good benefits because you have two different types of rental income coming in, not just, all of your other income. Having that commercial space definitely is nice. And it usually, especially if you're doing triple net leases, it is a cash cow. So sorry to hear this, Alexander. Yes, reach out to us and we can work something out. But the answer is yes. Looking for the next one.
We're almost through, Mom.
Yeah. I don't see any more, guys.
Oh, Vina says she has a question.
Vina has a question.
Oh my gosh. I feel special. When you guys are saying you'll bring partners on the team if you're going to be boots on the ground, does that mean they have operational control? What happens if they don't operate properly?
Ooh.
Good question.
Good question. Oscar, do you want to take this or you want me to do it?
No, we can both.
Okay.
I'll give my feedback first. Vina's asking, you'll bring partners on team if you are going to be boots on the ground. Does that mean they'll have operational control? What happens if they don't operate properly? So what we've been, for example, I'll give you an example of the deal that we did in Tennessee. Joseph, KJ, myself, Ione, Carolyn, Myron, we're all in Texas. So the deal that we got in Tennessee was brought to us by someone else who's our partner in this deal. They're a GP as well, so they are boots on the ground because they are proximity. They're the closest to the deal, but they also have a role in the asset management part, which is why we were saying that if someone brings us a deal in that particular market, we would like to have someone who is there. That way, if we need to do something physically at the property, they're there to be able to be boots on the ground and also have some sort of role in the asset management. And that's what we mean by the boots on the ground role for that particular person. What happens if they don't operate properly? I think that goes back to our upfront discussion and also operating agreement that if they do not perform, then that's grounds for whatever action we may need to take as far as like replacing them or whatever it may be. So I think that's my answer to that, Vina. Hopefully that brings a little bit of clarity. And Joseph, you can add anything if I missed anything there.
Yeah, so I guess I'll just touch on her other question here. It says, what if they mess up the asset management roles? So the asset management, we would still control the majority of that. The main role for them is to be the person that is the eyes and ears on the property, to go and check it out on a regular basis, to have that relationship with the property manager as well, essentially coordinating that. But most of the asset management would still be done by us. We would be the operators essentially of the deal. They're more so as an extended arm. What did she say? I'm not functionally what happened more for investor repercussions. Maybe this would be something we have a Zoom about and have like an open discussion or forum if you're open to that. I mean, I'd love to hear your insight. I mean, you've been doing this so much longer than we have. So a lot of the stuff that we're doing is what we have learned and combined from just multiple different people. She said, does it require giving up equity for this role? Yeah, it would be a percentage of equity, or at least that's how we do it. It's not a huge drastic percentage of it, but just so that they are comfortable and, are rewarded, because they are going to be doing a lot of work. Like our partner now in Tennessee, he was having so there was a huge mess with the property management just because the contract process just took forever with the attorney to close on the property. It was just a whole nonsense. Long story short, we're not using that attorney moving forward. But they had to go and essentially collect all the rents while the property management was getting their stuff in order. He said, but can this be a hired role? Yes, it could be a hired role. Absolutely. But the benefit that we see is having someone that is a part owner of the deal is that they're going to do ideally a better job because they have ownership and they want it to succeed rather than someone that's just there collecting a paycheck.
Well, I think it also comes down to like us vetting these people. Like it's not just anybody. That's why like if I see them taking action and investing in themselves and like really learning and like going above and beyond, and somebody that like our mentor Carlos, he I think it's like a 20-year-old is like, I think he's getting 1% or something.
Yeah, he has 1% of the deal.
He knows everything about the property, and just like the kind of person he is, I'm just like, wow, I was really impressed. He's acting like a 30 or 40-year-old mentally. And so I think that plays a huge role in it too. I wouldn't feel comfortable just giving it to somebody who doesn't know anything about anything, because I do see the risk in that as well. And no, I love the feedback. Definitely continue sharing, because I would love to learn from you. There's so many things, like you are way above where we're at. So.
I think both KJ and I were like, man, if she's got a mentorship, we would
join, definitely.
And I would love if you could do a Zoom on systems. we're like that's our bottleneck right now. We're like really struggling. Like that is I'm trying to get it done. Baby's due in 2 weeks. I already got an induced date, or however you say it. And so I'm trying to get all of this done, get our systems organized before then, and it's literally keeping me up at night. So that would be helpful. But yeah, I would love to do a Zoom with you and like talk more about this and just have an open discussion, because I mean, maybe I love hearing different what's the word? Perspectives. Yeah, like it's always good to bounce ideas. And 2 weeks. It's a little crazy. But yeah, I love that you're in here. We really appreciate the support and the feedback. And it would be really cool to collab. I'm down to do that. Because maybe you have ideas that we're not thinking of that could be better. Because right now, with me about to be out for a little while, I am having mom brain. I've been struggling. And to breathe. I've been struggling to breathe. Because we need to start delegating. That's our word of the year, is delegate. And so we're trying to figure out how can we do that, but also how can we incentivize people to want to do that, and also sharing all the knowledge and stuff that we paid a lot of money to learn. And we're figuring it out as we go. So any feedback is really appreciated, because we're just taking action and then seeing what works and doesn't work, and then we share with you guys what we did wrong or what we did right.
Literally our journey, right?
Yep. Some weeks we're 2 steps forward. Some weeks we're like 5 steps back.
And we're like, oh no.
Yeah, you have no idea what we go through a whole bunch of crazy stuff, and I'm sure you can relate, Vina. Like, it's just a wild journey, and I'm sure most of y'all can relate. Like, real estate entrepreneurship is just a roller coaster all the time. You have high highs and low lows, and sometimes you're kind of just right in between, riding it out. But you just have to keep pushing forward, as Pace always says, failing forward. I mean, that's literally what we're doing, and we're just pivoting every day, a new pivot. What do we need to do different? What do we need to do better? How can we be better? And that's just what we ask ourselves every day, and just keep pushing. But I know we kind of went off on a tangent there, but yeah, that's the idea behind it. We want to help people, grow with us, bring along as many people as we can as well, and kind of show the ropes and guide along. At the same time, have someone that is just as invested in the project as we are, so that it gets taken care of in the right way. That way we can continue to do more and more and more deals, and have those relationships, and just keep growing.
Yeah, and one other thing, Vina, that we really took from you, and that was when you came on our Zoom a couple of weeks ago, and you said something that we never forgot.
I
And
know it stuck with me too. I know what you're about to say because I
yeah,
said the same thing.
someone had asked you a question on our Zoom, Vina, and they had asked, like, how can they partner up with you? And you told them that it basically wasn't going to be a fit if they partner up with you, because you would be, you're at a different stage in your business where you would just take it over. But that's not the part that stuck with us. The part that stuck with us is what you said right after that. You said, what you want to do is you want to reach out to someone who's done 2 or 3 deals ahead of you, and reach out to those people, because those are the people who are more than likely going to help you out. And then once you do 2 or 3 of your own, then guess what you'll do? You'll go and do the same thing for someone else. And that's what stuck to us. Like, that's literally what we want to do, because that had stuck with us so much. Like, that's our mission right now, is let's help someone new to get their first deal. And that's what we're doing right now in one of the deals in Houston. We're helping a group of sub 2 students who are new, getting them their first deal. And because of that, that inspired us so much, Vina. So thank you. If you hadn't been in that Zoom, we wouldn't have that. We would have that perspective, but not that well of a perspective, because that really stuck to us, and I can't stop thinking about that. Like, that's our mission, to help out other people. So thank you.
Yeah, what Oscar is saying is it emphasized our
Exactly.
goal and our mission. Like, it was there, but it just brought it out. Like, man, that is what we need to focus on. So thank you for that revelation. That's I think that's the direction you were trying to take that.
Exactly.
So much appreciation to Vina, the queen, and everybody that's here, guys. I mean, this is amazing that you guys keep coming back every week, and sticking around. Obviously, that we must be doing something right. So it is super good to see you guys keep coming back, and we truly appreciate all of y'all for being here and supporting. We really do.
Yeah, I hope we give value. I mean, we literally are learning as we go, and I feel like honestly it's the best way to do it, because I wish that we had people sharing. Like, even though we're not that far ahead, like, I wish there was someone I could go ask questions to, that could help me along the way. Because when we first started, we didn't have that. And so it's really cool that multifamily is kind of blowing up in the real estate space, or at least maybe because that's what I'm focused on. That's all I see now. But it's life-changing. It's exciting. I enjoy it. Like, I don't know how I'm going to take a break when this baby comes, because I never stop working. So it'll be interesting, but we love all of you guys. I'm so excited. And check out that link if you guys want to come to the paid underwriting Zoom. That's going to help us pay for our CRM, going to help Baby Mud, and pay for the hard work we're putting into it. So yeah, we love you guys, and I don't see any other questions. So Vina, let's connect. I'll probably message you on Instagram and see how we can collab. And I think that's all I have.
Yep, that's all I got too.
Cool.
Vina said, "You'll make it all work." Enjoy the new baby though. The days are long, but the years are short. Aw. I always hear people say how fast it goes, and I'm like, oh, but I'm just gonna have to live in the moment.
That last part needs to be like on a picture frame. The days are long, but the years are short. Like that could be on the outside of a picture frame.
Yeah, it's a good
New
one.
business idea.
Aw. She missed when her babies are that little. Oh, that's so cute.
And
I'm
then it's
excited.
hot. There we go. I love it.
That's awesome. Well, we appreciate all of you guys. We'll be having another Friday Zoom this Friday. Let us know what you want us to do on Friday. We kind of never have anything planned. Not on purpose, but I mean, like,
that's not true. We plan things out as much in advance as we can.
No, what I meant is like I don't know what you guys want from us, so
Yeah.
like we don't know what to plan. So if you guys want to learn specific things, then just let us know, and then we can plan it better.
And I challenge you guys, if there's ever a Zoom or a live or something where we just don't bring the heat, let us know. Like we want to know what y'all are truly thinking. Like that the challenge is out there. Like if there's ever something that we just don't bring the energy or the value, I want y'all to let us know so
Call
we
us out.
can do better, right?
Gotta push each other.
Yeah, we don't want to just be stagnant. We want to always be constantly growing, and that's the goal. Is we want to continue always be growing. So let us know for sure.
Bina says, talk about how multifamily is giving you the freedom to enjoy the new edition.
That's a good one.
That is a good
Write
one.
that down.
Awesome. Well, cool. Anything else?
Nope. The links, where can they find those links?
The usual. Go look. I made a post. It's yellow, so it stands out on Facebook. In our multifamily group, I made a post. I try and tag everybody, but right after this, I will make the link. So like in like 10 minutes, you can go on Facebook and the link will be there. And for those of you who don't do this, this is a good tip. Add the link to your calendar in your notes section. Like add the event to your calendar and then put the link. And that's the best way to not have to look for it or lose it. And then the Friday Zoom, we use the same link every single Friday. So if you guys want to make your life easier on finding that and remembering it, just add it to your calendar.
And then this is the underwriting Zoom link that's on the 21st. So there's a Zoom tomorrow to potentially work with us and move forward with us. And then there's a Zoom on the 21st to learn underwriting. And then there's the regular Zoom this Friday as well. So love you guys. I'm going to leave it up to KJ to hit that outro music.
Thanks, guys.
And we'll see y'all tomorrow.
Bye.
Bye, guys.
Bye, guys.